Hey guys, Steve here with the strategy session for Wednesday, July 23rd, 2014. Let's take a quick look at the market. I tweeted out this morning that it looked like potentially we were going to have the breakout we've been looking for in the S&P, and it looks as though that is what happened today. We got to move a little bit above the previous resistance area. Not much. Maybe there's not a lot of conviction around it. Maybe it's just a slow trickle higher. But we did finally get that breakout. That was kind of alluded to yesterday when we looked at the NASDAQ. Actually wonder if we got... No, the Dow was actually down today, so it doesn't look like we got a breakout in the Dow either. Yeah. So just the NASDAQ, which is strong, and the S&P 500 futures broke out. Of course, one trade that we had identified last week, but were not able to trade was Facebook. So Facebook was basically, we identified on the 18th, of course, with earnings coming up. We passed on the trade, and after hours it looks as though Facebook around 74. So that would have been a nice little trade to take in Facebook, a nice little start. But the risk was there, and we didn't know what earnings were due, so we passed on the trade. One trade that did work out for us today was Apple. Apple had earnings last night. We identified a consolidation area, potentially a bounce off trend line, and looks like today we got a minimal breakout above this previous resistance. I would have liked to see it close a little bit further up in the range, towards the highs of the day, close down about, I would say, 70 cents. But with that trade and with that breakout, we're actually going to take our stop and move our stop to 93.09. 93.09 would then trigger a break of the previous resistance area. Of the trend line and previous support area that was identified by this box. So, we know now that this is a low because we have a high. So, that's really how I look at it. New high, new low, new trailing stop. Again, we'll make this green just to prevent confusion, and we're going to gray this out. So right there, with today's move, we were able to take our stop from 90.18 to 93.09. So with take $3 off the table of risk, which is definitely a bonus. Our other trade today, everything else was fairly flat, so we'll just run through them real quick. ADM, again, refer to the free trade idea that I'll link at the end of this video, but really just moving sideways, an accelerated trend. So we're looking at 47.32 as our stop for aggressive traders, and we're actually going to take and move our stop to 45.92 at this time, just to take some money off, some risk off the table. Oh, what's going on? Computer's having a rough time today, guys, so I apologize. Maybe it's the user, I'm not sure. Anyway, so our stop here is 45.92. Again, the difference between an aggressive trader and someone that's going to let it unfold. Our other stop for the free trade idea is actually at 47.32, which is this consolidation area up here. American Tower up minimally. Earnings coming up, so that might not move too much. Amazon down a little bit, inside day from yesterday. So, really not much going on. They have earnings tomorrow after the close, so that one's probably setting up, for maybe another move. Right now, I am looking at potentially having this trend line through here. So, again, this may want to come back and test this 337 area, but unfortunately we really don't have any type of consolidation. It's just a trickle higher that we can move our stops higher. So we'll see how earnings pan out tomorrow, but I'd like to move to this 337.62 at least. EQR, this one, it just trickles. Just let it work. Don't worry about it. Don't micromanage it. Don't try and maybe if you're aggressive, here's a consolidation, a breakout, you want to bring your stop up to here. We're actually going to take our stop to 63.16, which was the previous breakout. Take some risk off the table. again, it's all about managing risk. So, you know, we don't have any targets. I could, you know, this could go to 67 or it can go to 76. I don't know, but it's about managing risk. So take money off the table, move your stops higher when possible, and, you know, lock in, not necessarily locking in because we're not selling, but lock in some potential gains by raising the stops. Fidelity, you know, same thing. There's really no area to move our stop to at this point. So we're going to keep it at this 54.71 area. This stop will go away. And again, to prevent confusion, we'll make this green. Honeywell down a little bit today, you know, after yesterday where we had a close or an open higher and a close lower. Probably signaled some kind of exhaustion from the bulls. So again, this one could come down, potentially test 95.58 or come back into this trend line. But, you know, we do have a breakout on the weekly. So let's see if that actually follows through. Mondelez, you know, really tight consolidation in here. Again, earnings coming up on the 5th. So again, you know, we could have a potential break of trend line and then a test of the bottom of the box, signaling that, you know, maybe this isn't exactly ready to break out, or maybe it comes back into the middle of the box and then breaks higher. So let's see how that plays out. And you know, like I said, we're not really predicting anything. We're just looking at price action and seeing what unfolds. Right now, I'm looking at, for Wyndham, you know, another higher consolidation area. And the wife wants to bother me. Sorry about that. Boys are at the beach, so they're having fun, it looks like. Anyway, a higher consolidation. Looks like we have earnings in this name the 24th, which is actually, this is tomorrow morning. So earnings tomorrow morning in Wyndham. So tomorrow afternoon for Wyndham and Amazon. Let's take a quick look through the watch list. Let's see if we had APD. Wow. APD. Air Products. 126. That was a good breakout. Southwest Air broke out. Earnings tomorrow morning, so pass on that one. APC, middle of the range. Again, this is similar to what I did last night. Just went through. Ace, nothing. Murphy Oil, earnings coming up. Chevron, earnings coming up. Macy's, middle of the range. So Conoco, that would be a nice trade. Look at how Conoco's setting up. I mean, that's beautiful. That's a nice tight consolidation. Stop stays tight. Nice position size. Unfortunately, earnings. So as you can see, it's kind of tough to take some of these trades that, you know, may down the line turn out to be profitable. Same thing. MMC. It's a nice trade. It's a nice setup. If it wasn't for earnings, we'd be in that one. Marathon, earnings coming up. ExxonMobil actually broke out. I got an alert on that, but earnings are coming up. All right, it doesn't look like the rest may have. CSC, earnings coming up. Again, that's a nice trade. If you look at CSC, nice tight consolidation, moving towards the trend line, letting trend line become support, hitting it on a nice shallow angle, not coming in steep. There's not 3 or 4 days of extreme selling. It's just really moving sideways, hitting that and kind of deflecting off the trend line. But again, earnings coming up. Apache, same thing, earnings coming up. Or actually, were earnings today on Apache? No. All right, let's take a look at APD for a minute. It's in the materials sector. And I'm actually going to go ahead and pull up the portfolio here for us real quick. So materials, we have nothing in the materials sector. So actually, let's take a trade in APD. So we're going to look at APD, and this will be good practice. APD, our stop will be right here, 126.92. So about a $10 stop on $130 per share stock. 120, make it easy, make it 127. So $9 in risk. We're going to risk 6.68% of the position. And as you can see, our new adjusted model portfolio from our sale in TWX is 102.066.42. So 0.75% of risk puts us at 765.50, making our position size 84 shares for a total of $11,431 and an 11.2% allocation. So I'll put that trade in today, guys, after the video. And let's go back to Thinkorswim. So yeah, that basically is setting up the way we had anticipated. Nice shallow trend line, and we could even possibly draw a new trend line, kind of something like that. And we're going to set our stop. I mean, in all honesty, our stop really could be like 128.60, but let's give it a little bit of room. Looks like when it gapped up, it never even came back. So this was where the gap finished. So let's go 127 as our stop at or below. Nice strong move. Weekly chart, nothing to not like here. Got a nice weekly breakout here, nice move higher. And then we had a daily breakout, again a nice move higher. You know, potentially this is a channel, not sure, but you know, that's a good trade for right now. So our stop is going to sit right here at this 127 level, which is a good risk reward ratio. So 84 shares of APD buying at the open tomorrow. So I think that's it for tonight, guys.
If you like this video, subscribe below and hit the like button.
Follow Daddy on Twitter and start Twitch.
See you next time at the Twitter follower.
Thanks for watching.